Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Chicago wheat. In late May, the recent market peaked at the January 2022 low at 739, turning lower and creating a small descending triangle on the way down. The primary and secondary targets below for this pattern were both easily reached, and prices did not really stop until the dark blue highlighted neckline of the February to April reverse head and shoulders pattern, currently at 574. Now please remember this neckline, as it will show up again later. I spoke on this neckline 7 weeks ago when I said, and I quote, "This is what we are testing right now. Should this give way, then the next support is the December 2020 low at 566. And I suspect that we might see a slowing down towards there as the congestion throughout mid-February to late April starts kicking in under 588 and goes on all the way down to at least 545. So watch out for some potential slowing and from now onwards. This would also tie in with the idea of us looking at that small descending triangle as a possible halfway hesitation on the way down." End of quote. We have since then seen this slowing down, not a stop but a slowing down. The congestion from mid-February to late April has indeed impacted on the market's decline, and we have formed a small bear channel since late June, highlighted in bright red on my daily chart, and it's currently 536 to 568. I should say right now that I'm willing right now to finesse this upper bear channel line and even move it into another pattern type if I see it. Additionally, I believe that one should not look at this bear channel in isolation. Instead, look at it as part of the V-top, because a derivation of the V-top is a V-top with a handle or an extension. And I think this is what the late June to date actions might be. So what can we tell from such a pattern? Well, usually such patterns are small, much like the size of an earlier small descending triangle, and are usually pennants or bear flags. Not so in this case, at least for the moment. But it does not take away that much from the case for a much larger pattern, for such a larger pattern. Thus, I would look for the bear channel trend lines to show some of the immediate support and resistance. However, the pressure in such a pattern will tend to be for lower prices, and I can see immediately that below we have the September 2020 low at 540, and more importantly the 38.2% absolute Fibonacci line at 521. Personally, I would even start considering the June 2016 uptrend, currently at 479, and even the 2005 today uptrend, currently at 450. But these are not targets, just thoughts for another day. All this brings me to today's action and the attack on the upside over the bright red bear channel line, the upper bear channel line. This may well be part of the finessing I've previously mentioned. But I note how once again the dark blue neckline is interfering with the market, this time as a resistance, and for the most part we have seen declining highs bar today. Finally, I draw your attention to the possible dead cross of the green short medium moving average, currently at 600 even, and the gold long moving average, currently at 600 also. This is a lagging indicator, but still an indicator, and may fare better than when the short medium moving average pushed down below the mauve medium moving average, currently at 603, when it did not form a dead cross. Chicago corn. The extension to the lower trend line, which is currently at 466, of the July 2023 to January descending triangle, that's January 2024, descending triangle, as well as the long moving average, currently at 452, capped the market throughout May, leading to a small double top pattern. Chicago corn. The extension to the lower trend line, currently at 466, of the July 2023 to January 2024 descending triangle, as well as the long moving average, currently at 452, capped the market throughout May, leading to a small double top pattern. Prices headed lower, reaching both the primary and secondary targets for this double top, and then went below all the moving averages in mid-June, accelerating the fall once past the hurdle of the November 2020 high at 439. Prices finally halted between the November 2020 low at 403 and the October 2020 low at 387, creating a teeny triple bottom, and recovering all the way up to the highs 2 weeks ago of the 50% absolute Fibonacci line at 425. In the process of pulling back up, the market made a small July-based ascending wedge pattern. Late 2 weeks ago, prices penetrated the lower trend line of this pattern and soon after exited it completely. The market easily reached the primary target at 404.5, but we still have open the secondary harder to reach target X at 391. This leaves me to my final point, and one which I've spoken about 2 weeks ago, and I quote, "Considering the longer term, and only if the market really starts moving lower, consider whether this action throughout July is a bearish halfway hesitation or not." I'll leave you with that thought process going on. Kansas City wheat. Okay, so late last year we saw the development of a descending triangle from late November 2023 to mid-February 2024, highlighted in purple on my daily chart. 15 weeks ago we had an attempted breakout below, but prices hesitated, then continued to hesitate, such that what I initially thought might be a triple or quad bottom eventually became a quintuple bottom and also a rectangle pattern based on the 551 to 590 area. Please remember this area, 551 to 590, as it will become relevant again in more recent action. On the 22nd of April, yes, I can narrow it down to a single day. On the 22nd of April, we saw the first significant breakout of this rectangle pattern on the upside, piercing, and then the next day closing over the mauve highlighted medium moving average, currently at 618, which had run in parallel and just above the purple highlighted upper trend line of the descending triangle. The rise finished at the end of June with a V-top at the combination of the June 2014 high and the 2022 low at 748, turning lower throughout June. Such by the end of the month, prices were back down below the mauve medium moving average, and down this time at the purple highlighted extension to the lower trend line of the original, remember I said that? The original descending triangle, currently at 581, along with the important July 2021 low at 578 and the March 2021 low at 559. Since then, prices have moved sideways with decreasing highs and a new dark blue highlighted downtrend, currently at 588. This pattern construction is not a duplicate of what we have seen elsewhere, in Chicago for example, but it is a familiar one. You see the V-top with a handle or an extension built from late June to date. As I said in Chicago wheat, I believe that one should not look at this handle or extension in isolation, even though it has elements of a possible descending triangle about it. Instead, look at it as part of the V-top, because a derivation of the V-top is a V-top with an extension. And I think that is what late June to date's action might be. So, what can we tell from such a pattern? Well, usually such patterns are small and are pennants or bear flags, but not so in this case. However, it does not take away that much from the case for such a larger pattern. Thus, I would look for the dark blue downtrend and either the March 2021 low at 560 or the March this year low at 551 to show the immediate support and resistance, both of which we have seen throughout July. The pressure in any such pattern would be for lower prices, and I can see immediately below we have the important 38.2% absolute Fibonacci line at 533. However, personally, I would even start considering the unreconstructed December 1999 to date uptrend, currently at 496, even perhaps the twin dangers of the 2003 today uptrend currently at 446 and the 2002 today uptrend currently at 438. I should stress these are not targets, just thoughts. Thoughts for another day. The only other feature I'd like to discuss is once again a potential, this time a potential for a possible bow tie formation of the short medium moving average currently at 615, the medium moving average and the long moving average currently at 618. This again is not a possible but a potential pattern. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Service International Limited. And here comes the final important bit.